fundsupermart.com.
What's your outlook for gold in 2012?
Yes, we think that the price of gold in 2012 is going to continue to rise, and our central expectation is a rise of around 30%. However, we see very many more factors arguing for gold to go up than for gold to fall in this year.
So what are some of the reasons gold prices will go higher?
I think that gold has had, first of all, a very healthy chart. So gold hasn't gone up in a straight line, although it's been rising for many years. It's gone up, it's fallen, it's consolidated, it's moved up again. Most investors still have no exposure to gold. Certainly that's true in the West. It's true of institutional pension funds. And central banks have only really been buying gold for the last 2 years after selling it for 20 years. We think that some of the main buyers are going to continue to come from India and in China. And in China, investors have lost money in equities. Over the last few months, it's become very clear that they've lost money in property. So we're starting to see a big increase in Chinese investors buying gold. So that's certainly going to argue for the gold price to go up. We also think that growth is going to be negative in Europe. It's going to be slower in Asia, particularly in China. And we think that there's going to continue to be unrest in the Middle East. In fact, in the Middle East in 2012, we think that peace is probably the least likely outcome. And longer term, we do think inflation is going to continue to rise. So all those factors argue for the gold price to continue to rise.
So on the other hand, what factors could drive gold prices lower?
Well, I think that if we see strong growth, higher growth than expected around the world in the US or in China or in Asia, if we continue to see low inflation and stock prices rising, then that could cause some investors to sell gold. But we do think the downside from gold from here is really quite limited.
So some market participants are gaining exposure to gold through gold equities, as the spread between gold producers and gold prices is reportedly attractive. What's your take on this strategy?
I think, how do investors buy gold? I think they have a wide range of choices. Historically, they could only buy gold equity funds, equities of companies which mine for gold. Now they have a wider range of choices. They can buy physically backed ETFs. What we have seen in recent years, in some years, gold equities do better than gold, and that happened in 2010. In other years, such as 2011, gold did far better than gold equities. So we think a swing approach is probably necessary. We think the outlook for gold equities is probably slightly better this year, but we don't think it's going to significantly outperform, and there's going to be a huge difference between gold equities. So that is why at Schroders we have launched a new fund, our SAS Gold and Precious Metals Fund, and that's a swing fund. We can invest in gold, we can invest in physical gold through ETFs or futures, but we can also invest in equities, deciding which to buy. So we think, yes, slightly better prospects, but a risk-controlled, actively managed fund that can invest both in gold and in gold equities is probably, in our view, the best bet.